Like we promised, that one of our major aim on Clockwise is to bring you the opportunities and information to make wealth in the stock market. And one of the ways to make money in the stock market is to buy stocks when they are undervalued. Now you buy stocks at a lower price because you can sell at a very high price. Hello, welcome to Clockwise. My name is Providence, and today we'll be discussing something very, very interesting. We'll be talking about 5 undervalued stocks that can give you a generational buy opportunity. When we mean a generational buy opportunity, is that once you buy now that they are undervalued, we have all the indices, we have all the analysis to prove to you that they are going to take up. And once they take up, imagine how much you'll be making. And like I do it every time, I have my guests. Now, my guest sleeps on the charts, and I always say it. He sleeps on the chart, he's always with the fundamentals, and he brings us this information in the deepest form of it. Now, with a resounding virtual round of applause, welcome, Mr. Kane. Welcome again to Clockwise.
Thank you very much for having me. Thank you very much for having me.
All right, we're discussing 5 undervalued stocks because, when we talk about making money in the stock market, one of the ways is through dividends, through capital appreciation. And buying when the stock is undervalued is one of the best ways you can actually make money through capital appreciation. But before we go there, let's first of all discuss what happened to First Bank. It's a one bank as far as Nigeria is concerned. So let's discuss the story, the news. Let's just break it up.
Okay, so last week, First Holdco actually announced their Q1 earnings. It was very interesting. They were the last of the Tier 1 banks. So the Tier 1 banks is what we call the FOGAs. The First Holdco, that's UBA, and then you have GTCO, you have Access, and then of course you have Zenith Bank. So First Holdco announced its Q1 results. It was the last and indeed the best. And I'm going to tell you why I'm saying it was the best. Because its profit before tax grew by, you ready? 72%.
That's wow.
In just the first quarter, year on year, 72%. So
just between January to
first quarter is January to
March.
March. So it grew by 72%. So it moved from 186 billion to 321 billion, in that year. And so that was a very impressive performance from First Holdco, and it actually brings a lot of, it was very important that we had that because, we saw other names that came out, without paying, no talk about dividend payment. So a lot of investors were very, very discouraged. A lot of investors that chase dividend yields were very discouraged. So that was a very serious dent in the story.
I think they've done well. They've proven what they are.
First Bank did that, and beyond those numbers, something very significant happened. They grew return on equity by 31%. For context, the average of the FOGAs, the average return on equity for the FOGAs is sitting around 23%. So in this case, I called it an outsized gain in terms of return on equity. And that is predominantly because, and then of course, their impairment losses were quite down. And the reason is, I think First Bank said they were able to get 19 billion of their loans. Yeah, they are non-performing loans. They got back 19 billion. That in itself should, if your impairment losses go down, one of the challenges that Access Bank had was because the impairment losses were over $500 billion. So that's why when you look at some of the names, the numbers, it actually went very down. And then, of course, because we also look at efficiency too, the cost to income ratio for First Bank actually reduced from 53% to 45%. And let me just put a context to our viewers. So let's say if First Bank did to earn 100 naira, previously they had to put in 53 naira, but now they are only putting in 7 naira. Yeah, no, sorry, they are putting 45 naira. That 7 naira, that 8 naira difference might not sound very large, but when you realize the volume of, when you look at it at scale, it is an insane amount. So that shows that the bank is more efficient. And then you are talking about a bank that has just 26 billion, not 26 trillion as it's on its balance sheet, as its, its net asset value. So this was to me a very impressive performance from the bank. And so, though, I mean, a part that I wasn't very happy with, but I mean, you gain some, you lose some, is that the cost, total cost, operating expenses actually grew by 21%.
Okay.
Which is, yes, but I mean, if you look at the other numbers, they were very impressive. First Bank to me was the most impressive of all the figures that I've announced. And so it's something that we should keep a close eye on, because if it did this, because the next question someone would ask, of course, is it going to be sustainable? But I think the macro environment is actually a little bit more favorable. Though, the interest environment is more stable. And then we also have a few other momentous events happening. I remember someone mentioned, I think on the comment, said that banks, a few banks that were going to. The reality is that even though the Dangote listing, which has been what everybody's talking about because of how impactful it will be to the Nigerian exchange group, but some banks, tier 1 banks will generally benefit.
So they will benefit, yeah.
Because as investors are coming in, investors are looking at what do you have, what is the asset of that bank? Because that allows the bank to operate on a larger liquidity margin. So
the banks are still a good play.
Banks are going to make a lot of money from this.
All right, now let's move to undervalued stocks. You see, people actually know that for you to make money in the stock market, it's just basically two ways: either through dividends or through capital appreciation. And when you talk about capital appreciation, you're talking about buying at a particular price and selling at a price. That's a layman's understanding. Buying it at a lower price and selling at a higher price. Now we have some stocks now that are undervalued, but they have very strong fundamentals. They have very strong potential to actually move or to actually do well, just like First Bank. So let's actually go through a list of 4 or 5 undervalued stocks.
For me, what I mean by undervalued, some of the strong names.
First of all, let's look at what is undervalued.
An undervalued stock is a stock that trades lower than what its market value should be.
Yes.
For example, if you look at a name that I mentioned in the last podcast, it's been exploding, but it's still undervalued. For example, GTCO. If you look at what it has, the tailwinds for GTCO, you realize that even though it's trading at close to 1.3 price to book, it is still undervalued. But I mean, so that is the concept of undervalued. It's not that it's a name that is not known anyway. Undervalued means what is supposed to be the price of this and what is the actual price. My first name in this regard will still be in the financial space. And I mean, people say the performance for FY 2025 was not impressive. Even for the first quarter of 2026 was not as impressive as it could be. But I still think that Access Holdings, Access Bank, is still, Access Core, is still
is that number 1
undervalued. It's number 1 for me. And here is why I'm saying that. Access Bank is the largest when it comes to assets, the net asset value. It is the largest. It sits on $52 trillion. Trillion naira, sorry, I'm so sorry. 52 trillion naira in total assets. One of the things, when a bank sits on a very large asset base, their loan capacity is very high. What Access Bank needs to do is to really go after its bad debt. If you look at the what was announced, you realize that Access Bank only needs to look at those impairment losses actually dealt with the bank so much. And then, but I think that, and you look at the bank is actually trading at close to 0.3 price to book. As even Zenith Bank, is at almost 0.9 price to book. So if you look at it, I know that there will be a re-rating for Access Bank, really. Because if you look at even I'm going to really want to really pull up the performance of Access Bank for quarter 1. If you look at the quarter 1, you realize that profit after tax was impaired, of course, because it was very low because of this, what they had to make around. But you look at the net non-interest income grew by 19% to 444 billion naira. So because of the inflation has somehow cooled, the interest rate is no longer, interest environment is also stabilized. So what would determine banks that will perform well is how much value they can capture in non-interest activities. And the figure came up to 19.03%. And then you have interest income was still higher by 33%. So I think that the bank is actually poised to be able to do well. A few headwinds for the bank, especially around the impairment losses, but generally, and then the fact that the bank is not announcing any dividend payout, which is one of the things that investors look around. But beyond that, I think that the bank will be able to capitalize on the asset base, the gigantic asset base it has, to be able to make more in the coming quarters.
So Access Bank won.
So Access Bank won. Then the second.
What is the current price?
The Access Bank is still sitting at, I think, 23.
Okay.
23. And then that is even another reason why. Do I think there will be a further downdraft? I'm not thinking so, because if you look at, we are almost closing it at the issue price, the latest issue price, which means if I'm an investor or someone that bought into the bank, and I see that the bank still has strong fundamentals, I don't think I would be very comfortable booking in my losses at this point.
Okay.
Access Bank is a long-term play, so if you sell now, you have actually booked in those losses,
Right.
So Access Bank is a very strong one. Then the second one I would mention would be in the commodity space, Presco. Presco is, we have two behemoths when it comes to palm oil in Nigeria, Presco and Okomu. We've been talking a lot about Okomu, but Presco is still also an undervalued name, because, if you look at what they have in terms of like I told you, that only two people, really. And we saw what Okomu posted. So that can only tell you. And by the way, I had said earlier this year, if you observe, the Harmattan period was very, very, very short-lived. In fact, in some areas, there was no Harmattan whatsoever. And you know that this has a way of influencing the productivity of palm oil. And so what that means is that we expect a very serious supply crunch. Already, you can see the prices already through the roof in some markets. So players in the palm oil industry stand to gain a lot, in the oil palm industry, stand to gain a lot from such shortages. So I think Presco is primed to also be a strong winner in this regard. These are staple products. Palm oil, everybody consumes palm oil actually. And so beyond that, they're also doing a lot of export, a ton of exports. And so I believe that their earnings, their revenue will
Presco is actually currently undervalued.
To me, it's undervalued at this point. So I believe that it will actually surprise, even undervalued, but they did very well. But that's what I'm saying. Even names have done very well. But when you look at the fundamentals, you realize that these names still have a long way to the upside. So Presco is a name that I'm actually looking at. Then the other name which people should actually pay attention to, still in the Nigerian Exchange Group, like I had mentioned earlier, will still be GTCO. I know we have said about this bank over and over again, but the point for me is that if you look at how positioned that bank is, then you understand what I'm talking about. It has a very strong. There is going to be a generational. There is going to be a shift in terms of assets from the millennials or to the baby boomers to the millennials.
Is it infrastructure?
Infrastructure, but again, their customer base. If you understand this, that's why I said sometimes we look at as a long-term investor, you want to look at the transitioning of wealth from the baby boomers to the millennials. You know what that means? It means that any bank, any financial institution that is poised, that positions itself to appeal to that demographic is going to win big time. Now, if you look at which bank is closest to digital banks today, is GTBank in terms of the infrastructure there. So they have already positioned themselves to benefit from whatever from that market. Look at some names that have not been listed. You look at the names like OPay. OPay is very, literally everybody has as a personal banking app, really. So you can see it, I mean, it's still a private institution, so you can't really tell.
Will be listed in the American stock market.
Yes, but my point is, you cannot tell. It's a private company, so
for now.
For now, so you cannot really tell. They don't publish numbers as we would expect. But if these guys publish numbers, you see an insane, figure in terms of what they are making. So the closest in the public market to that is GTCO. So I think they still have some good upside. Then the fourth name I will mention in the Nigerian market, which I think it still has huge potential, is UBA. I know I've skewed so much to the banking, but banks are going to make a ton of money. They are said to make it. Remember, most these banks are actually what we see as insane gains so far. Is actually it's like this. If you have something that is here, and then you have something for this guy, he thinks that this is such a leap. These banks are coming out of very serious stress due to FX volatility. So they are actually experiencing what we call re-rating, and then the fact that we are expecting a ton of investment to come from the international community or the international global investment community to the Nigerian space, given the fact that Nigeria is being added to some global indices. So the banks provide the rail through which this investments coming. Yeah. So I'm going to mention just one more name in Nigeria, but this is like what we call an honorable mention. One more name in Nigeria, then we move to the US. So that one more name in Nigeria has to be, I would leave the financial space, it has to be in the industrials, which is Lafarge. Lafarge. Dangote Cement has done good, but Lafarge is also an emerging competitor. And when you look at the fact that it has it's done well, but it still has a very huge upside in terms of what the market share that it can actually get from that. Dangote is like a behemoth. You have Dangote, you have Boa Cement, you have Lafarge. Of all of them, if you look at their price to earnings ratio, then you realize that Lafarge actually stands a chance of really having a great upside. So it is also a name that I'm seriously considering. And it's going to benefit because people are building. The price of even houses now is through the roof. If you want to, it's a single bedroom flat you see hearing between almost =1 million naira just for a single bedroom flat. So those are the names I think you might want to keep an eye on. Some of them are not attractive at this point, but
that's why you're undervalued.
Yeah. So they are not attractive at this point. If you look at the charts, they are not very good. If you look at the chart of Access Bank, look at the chart of UBA, very terrible.
Presco.
But my point is, you want to invest when the market believes that
it's for long-term investors.
Yes.
Those that actually this is what the real investment is. It's long-term.
You don't buy high and sell low. You buy low, and sell high.
So you're not going, because if you don't buy now, you may buy high.
Someone mentioned, I think someone in the comment section said, when can I exit a position? The fact is this: if the fundamentals are still strong, we have market dislocations every single time. If the fundamentals are still strong, then sit on it. Like we said, sit on it, and then every time, from time to time, you see the market repricing, re-rating some assets, and then something that you thought was almost going to die becomes. Look at Intel, for instance. I'm sorry, I'm not even diving into the US market, but look at Intel. Intel, as at sometime last year, Intel was a name that nobody wanted to touch with a pool. But you've seen they are sitting in a space where it's like what we call a tide that lifts all boats. Intel has done, from the time I took a position in Intel, I took a position at $26. Now, as I speak with you, it's over $125.
That's it.
So at the time it was, nobody wanted to touch Intel. But I mean, the US government took a position in Intel, and then it has
just learn to buy. When you do the analysis very well, you just buy low until you sell high, because outside that, you're buying high. And which you may actually sell low.
Patience means you don't sell low. If you buy high, and then the fundamentals is, the market is in cycles. Manage your risk properly. You buy, even if you buy at the top, historically, if you manage your risk properly, there are chances that over the next, I know someone that actually bought S&P 500 back, I think 3 years ago when it was just 4,800. And it was like, should I sell? Should I sell? I told her, listen, you don't have to sell. This is a long-term investment. S&P 500 is currently trading at 7,300, so 7,400. So you can imagine how much he has.
Let's do the last one. Okay, let's go through it again. Access Bank.
So Access,
Presco,
GT,
UBA.
No, GT.
Lafarge.
Then you have Lafarge.
Okay.
Then I also mentioned
UBA.
Yeah, I mentioned UBA. That is something name you can also do. Then the name for the US stock market, I've always mentioned.
For those who are interested
in the US market. So you might look at a name, Meta. Meta is very undervalued. Meta is now trading at 21 times. In fact, is now over 23% cheaper than the S&P 500. So if you are thinking of S&P 500 is at all-time highs currently. Nasdaq is at all-time highs. Dow Jones is literally around all-time highs. So you have a name, a very strong name. Jensen Huang said that nobody does AI more than Meta. And so Meta is not Meta is not a hyper. Of all the biggest names, Meta is the only one that is not a hyperscaler. Okay. That which is why, and you see there's an explosion with data center builders and all of that for hyperscaler. So Meta stands not to benefit. If you look at Alphabet made a ton of money from the last earnings call, but Meta is still very, very strong play. They have Instagram, they have WhatsApp, they have Facebook. So if you look at in terms of AI advertising, then Meta is a behemoth. So, but I mean, it's trading at more than 20% off its all-time highs. It's still very it's about 20. I think its PE ratio is about 20, not 20% off its all-time high. I meant to say the PE ratio is 20 times forward earnings. So that is cheap. If you look at its competitor, its peers, you are still talking about 26, 27, almost 30 times forward earnings. So I think it is still cheap. I think it's a good buy position. I took a position at I think $608. I think it's moved up to 600. But I mean, it is still very, very far away from its all-time high. So I think Meta is going to be a name. If the AI, which I believe the AI race has just started, the AI explosion has literally just started. So
Meta will be a good deal.
Meta is going to be a good deal.
Okay, all right. Now, so we have Meta for those who are interested in actually investing in the US stock. Like we actually preach on this channel often. You don't only diversify your portfolio, you can as well diversify the economy. Yeah. So that's why we bring in at least one foreign stocks, those of us like Nigeria, like US stocks, so that those who want to actually get themselves exposed to it can start now. I think we've done it here, and let's see, we'll look at the charts and see how to continue this movement. So thank you for coming.
You're welcome.
Thank you for coming. Now, at this point, we'll come to the end of today's episode of Clockwise, and please do not forget to like, subscribe, and put a notification bell on this channel because of the amazing content we bring. And also do not forget that the elite of the 21st century are not those who do not go to school or those who will not go to school, but are those who have refused to evolve as the environment is evolving. My name is Providence. I'll see you again.